Hey guys, what's going on? Coming at you with a Thursday morning video. Before I get into this, make sure you like, subscribe, comment below. Really trying to get to 600 subs by the end of this month, so if you just hit the subscribe button, it's much appreciated. So today I wanted to talk about Wynn Resorts. Ticker is WYNN. Their Q2 earnings just came out yesterday, and I just wanted to talk about some things that made, it's just very interesting how things work. And if you haven't watched my previous videos, I'm a long-term investor, and I'll explain to you why, I think that's the best way to gain wealth long-term. So if you do calls, puts, day trading or whatever, you'd think like, oh, when Vegas opened up this spring, it was extremely busy. If you just read certain forums or discords or, ask around, like Vegas has been insane all spring and summer to date. So obviously, if you look at the rates of the hotels, really anywhere like Wynn or any of them, they were going for such a premium, which means they had no space, they were upcharging, and people were spending, people wanted to get out and leave. So with that said, there's super high expectations, obviously, for earnings. So EPS over the past year had an 81% increase. That's crazy. Analysts got beat by 24% in Q2. So that's a massive, massive, massive beat. So, that's, really they had a double beat. So they beat an EPS. Revenue, they came in at 990 million. Analysts had them coming in at 958 million. So you would think that, with both these things, the stock would skyrocket. Like if you're day trading or you're option trading, you'd be like, oh, well, Vegas was so busy, they opened up, people are spending like crazy. So you would think the stock would be going up. However, when the earnings came out, the stock has shot down. And the crazy part is it's lower than the 6 months lows. So it's right around, I believe, $90 right now. Let me just check real quick. Yeah, so as of right now, it's at $91.20. So the stock had a 4% downwards turn yesterday. So, it's just, this is really important just to understand, because you can't always go based on if earnings are bad, sometimes they go up. If earnings are good, sometimes they go down. So, really, as long as you like the company, like the fundamentals, that's kind of the investing I do. That's kind of really how you want to handle this. So I have a cost base of Wynn at $75.20. So I don't really talk about the stock much because it was kind of running, and the last 6 months, due to the pent-up demand of travel, and there was no Delta out or anything like that. So really, it's been going up. If the stock runs up, I'm not interested in buying. However, the stock is dipping like crazy right now, and it's getting closer to my cost base. If this stock goes to $85, I probably will average cost up. And the lower it goes down, the more aggressively I'll buy till it gets that. I can't see the stock really going below $75, honestly. The reason it's dipping down like this is because people are scared of lockdowns. So, if Vegas has to close down or mandate or lockdown or stop conventions from coming, because that was a real big thing this the back half of summer or early fall. They were saying conventions are going to come back, and mind you, all this is without conventions really there. So this is just retail people just going there and spending. So add conventions. Conventions is a massive business to Vegas's revenue and stuff like that. So long term, as a long-term investor, this is all short-term fear, whatever. Fear is good because that gives you opportunity to buy. So, I do think this stock, one day will be $200 plus, might be a couple years, but as a long-term investor, if it's at $91 right now, that's over a 2X. And then they pay dividends. It's a really strong balance sheet, one of the best resorts in the world, in my opinion, as far as management, appearance, and everything. So this is a really good stock. Now, if you're not in this stock, starting a cost base at $91 is not a bad play. And if it goes down, great, buy more. If it goes up, you can kind of be, if you're willing to hold for a couple of years, you'd be like, all right, well, I'm going to probably at least get a 50 to 100% return on my investment. And that's kind of the play I'm at. This is kind of one of my few dividend / value stocks. So this is a top 10 position of mine, but the more it goes down, the more aggressive I'm going to buy it. I would be fine making it a top 5, but right now it's a top 10. So that's my opinion on Q2 earnings. They killed it. They're going to continue to kill it. Short term, there might be a little bit of pain. Buying right now at 91.20 is a buy in my opinion. My cost base is 75.20. And yeah, that's all I got. So make sure if you like this video, make sure you like, subscribe, comment below. I do have some other stocks I talk about a lot, earnings coming out shortly, I think the next like week or two. So definitely subscribe if you want to hear my thoughts on those earnings, what I'm doing, you know, and that's basically my plan of action for Wynn. That's it. Peace.